Singapore's improving labour market is seeing employment numbers rise to near pre-pandemic levels. Total employment for the second quarter is 99.5% of levels in December 2019. The number of employed Singaporeans and permanent residents has also grown steadily for the first half of the year. But the Manpower Ministry warns that demand for labour may ease in the months ahead, as Chloe Chu finds out.
Labour-intensive sectors like construction and manufacturing have been hard at work filling job vacancies since border controls relaxed in April. The increase from non-residents has mainly contributed to the surge in total employment. Even so, non-resident employment remained 10% below the pre-pandemic level. In total, the number of people employed grew by 66,500 in the second quarter. That's a big jump from the 42,000 increase in the previous quarter. Resident employment rose steadily in growth sectors like information and communications, as well as financial and insurance services.
These sectors have had a head start in digital transformation and workforce reskilling, and which has really helped them to prepare for the new economy. So sectors that are not embarked so quickly, perhaps maybe in the tourism sector, they will likely struggle. And it is important now to accelerate this transformation.
But the Manpower Ministry is warning of rough seas ahead, in spite of figures that seem to point to a recovery.
The outlook for several sectors in Singapore's economy has improved due to the significant easing of Singapore's COVID-19 restrictions, but the external demand outlook has weakened given the global economic slowdown. Global headwinds such as the Russian-Ukraine conflict, geopolitical tensions in the region, the trajectory of COVID-19 pandemic will weigh on our labour demand going forward.
Mr. Ng points to recent retrenchments at Foodpanda and Shopee, saying the labour crunch will ease sooner than we think. That's despite unemployment rates staying within pre-pandemic levels and retrenchments falling to a record low of 990 in the second quarter. But the number of retrenched residents who found work within 6 months fell to around 65%. Experts say this could be a worrying sign.
This is really likely due to a skills mismatch as a result of the exponential pace of digital acceleration brought on by COVID. Industries with workers who have not upskilled will be caught in this situation, where retrenched workers might find it harder to get back into the workforce.
With an uncertain economic future lying ahead, the Manpower Ministry urges firms to push ahead with transforming their businesses and strengthen the local workforce through reskilling.